So recently, the New York Federal Reserve released its latest quarterly report on household debt and credit. And can you guess what it actually shows? Well, according to the report, the household debt rose by $869 billion in the fourth quarter of 2018 and reached over $13 trillion. The past 18 quarters have seen increases, but this trend seems to be coming to an end. During the same time period, there has been a decline in credit extensions for auto and mortgages. And the number of new credit inquiries over the previous 6 months fell to the lowest level, less than 145 million since 2003. So what does this mean for consumers, and why are credit inquiries declining, and is this a good or a bad thing? Well, for those of you guys who are new to the credit world, inquiries and credit report requests are credit report requests that comes from lenders. These are also known as hard pulls. These hard pulls are used by lenders to evaluate the borrower's credit worthiness or how risky it would be to extend credit or loan money to you. If there's a decline in inquiries, approvals for new credit should also decline. And economists estimate that approximately 2/3 of the economy is driven by consumer spending, which is mostly driven by credit. In turn, these few credit requests could mean that there will be a decrease in new loans and credit card issuers, and that means less money to drive America's economy. Now, a separate survey conducted by the Federal Reserve Bank recently found that 25% of banks showed less demand for loans. Also, that American Bankers Association reported in January that between July and September of 2018, new credit card accounts dropped by 6%. The Fed quarterly report shows that over 200 million new accounts were opened over the last year, but around 225 million accounts were closed. So although this may not be great for the American economy, it could suggest that Americans are slowing down on their debt growth and improving their financial responsibility by bringing down debt and spending money more wisely, which I recommend everybody does. You may be thinking, why hasn't the debt already declined? Well, the Fed report shows that new auto loans are at their highest, and as well as the high credit card balances, interest rates are also adding to the debt. One thing that will help bring debt down is to pay off a portion of existing debt each month. Interest rate increasing also accelerate debt growth. Now, with that being said, this data should give you some insight on the debt situation in America. So take this time to analyze your own household debt. If the debt is constantly increasing, look over the budget and see where adjustments or improvements can be made. Maybe your debt is increasing because you are overspending or had an unexpected expense that caused you to go over your budget. Find out which areas you can cut or at the very least decrease so that you can create a monthly surplus to use towards your paying down your debt. Make sure that you also are maintaining healthy credit score by making on-time payments and trying to look for lower interest rates on current and future debts. It's also very important that you are regularly monitoring all of your accounts and checking for your credit report for any signs of fraud. With that being said, guys, in the comments below, all right, hold up. So now that you know the consumer credit inquiries are declining, do you think that this is a good or a bad thing? Do you think that Americans have agreed? 3, 2. So now that you know consumer credit inquiries are declining, do you think that this is a good or a bad thing? Do you think that Americans have agreed that they have too much debt? Let us know in the comments below what you think about this data and what steps you will be taking to improve your own debt situation. And like I mentioned before, you're always welcome to take advantage of the free credit evaluation offered here by BWS. Their information will be in the links below, and you're more than welcome to click the link to schedule your next evaluation to give a better insight of what your particular situation is. Once again, guys, let us know if you like this video and if you want more such as this. With that being said, thank you guys so much for the love and support. Make sure to like, comment, subscribe, share with family and friends, and until the next episode on Keeping It Real with Credit, peace.